If you're self-employed and wondered what your taxes should look like, um, this is what I'm going to go over today. So first, I just always like to explain, most people have been employees before, and if you made 100 grand as an employee, your paycheck has been withholding taxes for you. And in this scenario, if you made 100 grand, all these taxes would have been withheld for you: your payroll taxes, your federal withholding, your state withholding, assuming you have a state with state income tax. I just included this in here, even though I live in Nevada and don't have state income tax. Now, if you become self-employed, no taxes are withheld on your behalf. That means you have to pay for it yourself. So hypothetically, in 1 year, if you made 100 grand, you should pay taxes in the ballpark of about 25%. So here's a little chart I made. If you have self-employment tax and you're single, you made 100 grand in net income, revenues minus expenses, your tax rate is about 23%. I'll round up to 25%. If you make 150 grand, it's about 26%. 250 grand, about 28%. 500 grand. This is for if you're single. If you're married, it's a bit lower, since you have income for two people. This also assumes your spouse isn't working. So here are the rough percentages. And so I just used, I think, a little over 25% because you are paying federal taxes and then self-employment taxes, which include Social Security and Medicare. And if you add those together, well, I guess it's a little under 25% because self-employment tax is 15.3%, but you're not getting taxed 15.3% on the whole amount. It's 92.35%. And then it's 15.3% on that. So anyways, ballpark around 25% is what you should pay. So based off of this, when you go from employee to self-employed, even though you're making the same amount of money, now you're having to pay about 5 to 6 grand more in taxes because you're paying the other half of Social Security and Medicare, which is also known as self-employment tax. And that means you have to pay for it. So every quarter you should be paying that amount. And of course, I just made this even. And so throughout the year, 4 times, you should pay a total of $26,630, assuming 100 grand of net income. So this is what it looks like on a monthly basis. To make it a little bit more realistic, month 1, you'll make 1,000, 2,000, 3,000, 4,000, and then your income increases throughout the year for a total of 100 grand during the year. And you're you should set this money aside. So I estimate federal tax at 10%, but it could be higher depending on, of course, how much net income you project to make. Self-employment taxes is 15.3%. So in the first month, if you made $1,000, you should put away 10%. You should put away 14% for self-employment taxes, so total about $241. And if you have a state, and if you're in a state that has income tax, you should also set that money aside. I just use 2.5% because that's what Arizona's is. And so during the first month, you'll have $1,000 in your personal bank account. Maybe you have these amounts in a separate savings account. And then you won't have to pay for it until March 15th of that year. So in 2026, March 15th, you should pay these amounts: self-employment taxes, federal taxes. I mean, these are going to be added together. You're going to make this amount to the IRS combined. It's not going to be 2 separate payments. It's going to be a one payment of, we'll just call it $1,500, and you'll pay $150 to the state of Arizona or California, whichever state you have. So in the first 3 months, you'll have that in your bank account, 6 grand, and hopefully you put these amounts off to the side, and then you'll pay those amounts to their respective state agencies. And then the second quarter, it's going to be June 15th. And then you'll pay these amounts September 15th and then January 15th. I just put this in month 12 just because I don't want to make another column. But so you're going to be paying 4 times throughout the year of these taxes that you owe. So it becomes your responsibility. And so let's just assume this is what happened. You made this much money, you put this money aside. Every quarter you made these estimated tax payments to the IRS as well as to your state. And when you file your taxes at the end of the year, you'll file your business income on Schedule C. It would probably be closer to like 150 grand, 200 grand, whatever it is, minus expenses. So you get a total of 100 grand. I just put 100 grand as the income with no expenses because what we're really concerned about was net income amount. I could have made it more realistic, made it 150, put some expenses in here, but I didn't do that. So when you file your taxes, you'll have 100 grand of business income. You'll have to pay 15.3% self-employment taxes, but the math on that is the 0.9235 for Social Security and Medicare. So you have to pay that in taxes. However, the IRS does give you 1/2 of that as a deduction. And so you get to subtract half of that self-employment taxes and you get $92,935. This is assuming you're single. You get the standard deduction, assuming you don't itemize. This whole thing is supposed to kind of teach you the concept of it. I'll say everyone's tax situation is different. You might have some interest income, but I'm only focusing on if you only have this business income. You also get something called the qualified business income deduction, which is going to be the smaller of 20% of essentially this amount, your income minus 1/2 of self-employment, or 20% of income. And so in this scenario, it was 15,367. So you get that as a deduction. So just think about it as an additional deduction because you're a business owner. So your taxable income is 61,468. Here's this tax table, assuming you're single. Your marginal tax rate is 22%, but your average tax rate's a little over 13%. So your income tax on that is $8,235. Your self-employment tax on that is $14,130. So combined, your total tax is $22,365, roughly about 25%. So in the remaining, you'll get that as a refund. However, if you are a business owner and comes tax time, you probably just want to roll this amount over to the first quarter of the following year. So in this scenario, it would be 2027. And so therefore you'll do the same process again every single quarter to determine how much money you made. So in that hypothetical scenario, you'll get a refund of $1,765. Most likely you're going to roll it over to 2027 taxes. In the state of Arizona, there's no self-employment taxes. It's just they're 2.5% tax. In this hypothetical scenario, you'll get a refund of $579. Of course, you'll probably want to roll that over as well for the state of Arizona. In California, their taxes are higher. Also a progressive tax, marginal tax rate at 9.3%. And then you'll owe about $1,900. So you probably, in this scenario, you want to increase your quarterly estimated payments to them. So in this scenario, if you are in California, you probably want to pump these state taxes up maybe to closer to 5%, maybe 6%, actually maybe even 10%. So, and of course, if you overpay, you can get a refund or roll it over to the following year. So that's what it looks like on this hypothetical. Obviously, your business isn't going to be that smooth, and you might not even start in the beginning of the year. So you can make 100 grand maybe in 6 months, maybe in 3 months, or you might not even make that at all. But I think this chart is pretty good to kind of give you a rough idea. If you throughout the year you're like, oh, I made $250,000. Oh, I should make sure I probably put closer to 30% away of my income to make sure I can pay for the taxes. And if you're married, closer to 22%. If you made $250,000. And of course, you make more. Well, once you start making more, you probably want to talk to a professional. Pretty much, actually, after 100 grand, you probably want to talk to a tax professional just to make sure maybe it makes sense to convert to an S corporation, implement some other tax strategies. Well, I forgot to include, you can also set up a solo 401k, SEP IRA, also pay for your health insurance, so more deductions, but I just excluded that in terms of actual numbers, but included on here just so you're aware of it. And you putting away money in your solo 401k or SEP IRA, yes, it's money out of your account, but it's still yours. So it's still part of your monthly net worth. So we can go another scenario where, let's just say you started the business 6 months in June, let's just say. And so you only have 6 months worth of your first 6 months of income. So you only made $21,000. And so your Schedule C is just going to be $21,000. Of course, it'd be like, I don't know, $40,000 minus expenses to get to that $21,000. $21,000 of business income. You have to pay self-employment taxes down here, but then you get a 1/2 self-employment tax deduction up here. And then you'll get we're assuming the standard deduction again. You get a lot smaller QBI. Your taxable income is $2,733 at 10%. That's your income tax. You still have to pay your self-employment taxes. So total taxes is $3,240. We assumed, let's see. Okay. So I guess we still assumed you made 3 quarterly estimated payments, since this would only cover, this isn't exactly perfect, but if you would have started in June, this would be your June payment, your September payment, and then your January payment. So you'd be making tax payments every quarter, and if that did happen, you'd get a refund of $1,827. Once again, you probably want to roll that over to 2027, but that just kind of shows you that the amount of money you make depends on the calendar year. And so in this scenario, you would only have income about $21,000. In Arizona, you get a refund $440 at a little under 20 grand in income. California, you would also get a refund. Actually, this math doesn't look right. All right. Well, that was a bad example, and I want to remake this video. But hopefully you get the idea. This is the concept. We can go back to making 100 grand. So hopefully this helps in terms of how your taxes would be if you become self-employed, how those taxes will be paid. You want to, estimate your taxes every quarter. And then your taxes, federal taxes, self-employment taxes go in the same bucket. Oh, actually what I wanted to show was, if we removed this, we assume we pay self-employment taxes of almost $3 grand and income tax about $2,100. So the self-employment tax we still had to pay no matter what. It's higher than the income tax. Income tax only $273. So, and this portion is non-refundable, and this part is refundable. So that's why you get this $1,827, because we withheld the $2,100. So that was something I wanted to point out. So let me know if you have any questions on this, if I missed anything or this is confusing, in the comments. And this worksheet I'm going to include as a link. I'll need to correct this California thing before I upload it. So yeah, any questions, let me know in the comments.